Hey guys, so in this segment, I want to give you the good, the bad, and the ugly about forbearance. You know, there's been a lot of information in the news and in the media lately about this. Now it's been a couple weeks that the CARES Act has been out and people have been implementing these programs. I've been talking to homeowners. I've been talking to home buyers. I've been talking to industry executives and loan officers all over. And I've gotten a really good handle on what's going on. And I want to give you really unbiased feedback. I want to give you my opinion on what is happening out there and really just give you the down and dirty on what is happening with forbearance. So with that said, I am somebody that totally believes that forbearance is something that should be used in the circumstance where you need it. Now, who needs forbearance? Who is this really for? Well, if you're somebody that's lost your job, then forbearance is an option I would look at. If you're somebody that's had a reduction in income, then forbearance is something that I think is valuable to you and could help you keep your home when otherwise you may be foreclosed on. And if you're somebody who needs it, which is those that I just talked about, then fine. I applaud you for using this program, and I encourage you to contact your mortgage servicer and use these programs. However, what we're seeing is rampant abuse of forbearance. And that's really what I want to focus on for the rest of today's presentation here, is talking about the abuse of forbearance, who it's not for, and some of the repercussions that you may not be aware of. So the way that it's really been talked about in the media and the way that it's been portrayed all over is that this is a free-for-all. If you're somebody who doesn't want to make your mortgage payment, then go ahead and take advantage of this program. Go ahead and get a forbearance on your loan. And that's really all they tell you is, hey, you don't have to make your mortgage payment for 3 months, 6 months, even up to 12 months time. So people hear that and then they tune out and they just go, okay, this sounds great. I don't need to make my payment for a few months. It sounds like a good option. I just had a conversation with a homeowner a couple of hours ago today that was looking to refinance their home. And in my initial conversation with them when I took their loan application, we didn't mention anything about forbearance. They didn't say anything to me about forbearance. Then all of a sudden I look on their credit report and it says their loan is in forbearance. When I talked to them about it, they said, oh yeah, it was just offered up to me as an option and I'm not going to take advantage of it, but they said I could if I wanted to. And I had to explain to this homeowner that, number one, they did take advantage of it because their mortgage servicer put on there that their mortgage is in forbearance. And the second thing is they're not eligible now to refinance their home because they're in the forbearance, whether they quote unquote take advantage of it or not. But the big eye-opening thing was this person makes 80 grand a year at their job. They have a good job. They're in the medical field. They have no issue with making their monthly mortgage payment, yet they were coerced, they were coaxed, whatever you want to say, into doing this. And they thought they didn't even sign up, but yet their credit report says that they did. So, you know, a huge issue that I'm seeing is that it is being looked at as a free-for-all and nobody's talking about repercussions at all, which we'll cover here in a minute. Now, there's no proof required, and that to me is a huge issue because this is really designed for people that, like I said, lost their job, had a reduction in income, and this is their only way to stay in their home. Because there's no proof required, people are abusing this system. People are abusing this program. Now, I think the statistic I had heard was that when they put this out that there was not going to be any proof required or anything, they expected 1% of mortgage holders to take advantage. And by last calculation, there was 6% of U.S. mortgages that are currently in the forbearance status. So it's 6 times what they originally had expected. And I believe that if they did ask for proof, if they did make you show hardship, then at least half to 3/4 of the people that have used this forbearance option would not be able to. I think the reason that the administration went ahead and didn't require proof is because they figured there was such a wide variety of people that would need to take this into consideration in their circumstance, it would backlog the system if they required proof, they required documentation, which is the normal protocol when doing a forbearance before this whole COVID-19 pandemic took way. So I'm here to tell you that a forbearance is not free money. Whether you need it or not, it's really the same protocol. You are going to have to pay this money back, and there are repercussions. So if you're thinking that this may be something you want to look at, I believe that once you understand what the repercussions are, and once you understand how this might affect you, and once you realize the long-term effect that this will have on your financial situation, your credit situation, your ability to get a future mortgage or financing, you may want to think twice about it. So repercussions, what are those? Well, the biggest one is a lump sum payment. So pretty much all of the forbearances that I'm seeing that have been implemented, what I'm being told is that they are requiring a lump sum payment at the end of the forbearance. So if you have a $2,000 a month mortgage payment, you have a 3-month forbearance, then in the 4th month, you're going to owe 4 months of mortgage payments because you're going to owe the 3 that you didn't pay plus the 4th month, which is the month that you're now in. So on a $2,000 a month mortgage payment, we are talking about a situation of owing $8,000. Even if you make a 6-figure salary or a 6-figure income at your job, I think anybody would agree that coming up with $8,000 at one time, or even $5,000 at one time, especially if you had an undue financial hardship, would be pretty much impossible to do. And the mortgage companies know this, so when people ask about it, what they're saying is, well, we'll work with you. We'll, call us back at the end of your forbearance. We'll talk about options. We'll discuss modifying your loan. So that is pretty much every single time what they're going to want you to do, is to do a loan modification. Now, I've talked about loan modifications in other lessons. I've talked about what those have as far as an effect on your future mortgage ability, your credit standing and whatnot. So I don't want to focus on that here, but I do want to tell you that a modification is a negative thing overall. The most common way I see modifications done is that they will take your payments from the forbearance, they'll put those on the back of the loan, but then they'll re-amortize your loan for like a 40-year payment. Again, that's 40 years, 40. So if you had a 30-year mortgage, you're 3 years in, you had 27 years left, now they're going to put you back on a 40-year mortgage so that you could not pay your mortgage for a couple months. Really, what good does that do you? Okay, a 40-year mortgage is prohibited right now in the United States. They used to be available. Up until I think it was 2008, they were available for a normal mortgage transaction. You could get a 40-year mortgage. The government outlawed those mortgages. You can no longer get a 40-year mortgage on a conventional mortgage program. There's a reason for that, because they're predatory. Okay? They're negative. They're bad for consumers. That's why they're not available anymore. Yet, these mortgage servicers are allowed to offer you this type of option on a modification if you can't make your payment, if you need to, go these routes because you can't make that lump sum payment. Pretty much every time, that's what they're going to offer. So credit issues. There's going to be credit repercussions as a result of doing a forbearance. Even if you miraculously come up with this huge sum of 3 or 4 payments or more at one time, there's still credit issues because your credit report now shows your payment history, okay? There's something called trended credit data, which came across in the last year or so, where it doesn't only show that you have no payments late in the last 12 months or 24 months, but it actually shows a detailed analysis of your payment history, meaning every single month, what was the scheduled payment, how much did you pay, and what is the resulting balance of that? Okay, up until a couple years ago, the credit report didn't show that. The problem is that with trended credit data now and these forbearances, even if you get back on track after the forbearance, even if you don't have to go through a loan modification, it's going to show on your credit that you had several months of no mortgage payment being made. Do you really think that a mortgage underwriter is going to consider you a good risk if you didn't make your mortgage payment for 3, 4, 6, 12 months? They're not. And I've seen a lot of the major mortgage bankers and underwriters out there that have come back and said in just the last few weeks, if we find out that you have done a forbearance in the last 12 to 24 months, you are not eligible for a new mortgage. Okay? Now, there may be certain circumstances if we can show that you legitimately had a hardship at your job, you got let go or whatnot, and then you went back. There may be certain loopholes there. There may be certain ways that you can get a new mortgage, but I'm going to say for the majority, that's not going to happen. And you need to err on the side of caution and figure if you're getting a forbearance, regardless of the reason, that it's going to be difficult or impossible to get a new mortgage anytime in the next few years. Okay? So those are the credit issues that I'm talking about. And that's giving the benefit of the doubt to the servicers that they're not going to report you late on your credit. That's saying that they're not going to put any derogatory remarks or put that the loan was in forbearance previously on your credit. We don't really know right now what they're going to do. This is all happening day by day. So nobody's in a position yet where they've had a forbearance a few months ago, and here's where their credit's at today. So like I said, there's some major repercussion when it comes to future mortgage qualification issues. But the bottom line is that when you're going to do a forbearance, there's very limited circumstances where you'd be better off, okay? Even if you do go back to work and you do keep your home and they do help you, overall from the standpoint that you didn't make a payment for a few months and you're somehow able to get miraculously back on track here, you're still, in almost all cases, going to be in a worse case than you were before the forbearance. Whether you owe more money on your mortgage than you did before, whether you owe more time than you did before because of a loan modification, or because of the credit issues that we discussed here a few minutes ago, as well as the future mortgage qualification issues. What are the risks of that? What if you needed to move and get a new job and get a new property somewhere in a year? Or 18 months, and now you're shut out from being able to do that because of this mortgage forbearance that somebody thought was a good idea. Okay? So, like I said, I'm all for people that need this program to go ahead and use it as an option instead of getting foreclosed on. What I'm not for is the abuses, and I'm not for people taking advantage, okay, of the fact that you do not need to show this hardship, and you don't need to show documentation, and you don't need to show proof. So if you're somebody that is thinking about doing it and you don't really need it, then my question to you is, what the hell are you doing? You're screwing up our industry, you're screwing up the market, and you're really making it harder for people that do actually need it. So the last topic that I really want to cover here is the repercussions on the mortgage industry. Okay? What we're seeing is that the GSEs, which are Fannie Mae, Freddie Mac, FHA, they are adding huge fees to these loans in order to buy them if they're in forbearance. And what we're seeing on a consumer level is that the mortgage companies that are making these loans, they're adding anywhere from a 50 basis point to 100 basis point hit. Now, what that means in layman's terms is a 0.5% to 1% addition onto the fees of the new mortgage you're going to get in order to compensate for your friends, family, and neighbors that are taking advantage of these programs, and then they're not able to sell these loans to the government-sponsored entities like Fannie Mae, Freddie Mac, FHA. So these mortgage companies are needing to pad their profit, because if they don't do that, then they're going to end up having to hold the bag when people do these forbearances and they're not actually able to sell the loan, or have to do so at a really high fee. So what it's ending up doing is it's raising the cost for consumers of credit. It's raising the fees on a mortgage. It's raising the interest rates on a mortgage. So right now we're in this historically low interest time, and the rates are not as low as they should be. And it's as a result of this. This is one of the biggest, if not the biggest reason that mortgage rates are not in the twos on almost all loan programs right now, is because lenders have to pad their pockets. They have to prepare for this huge wave of people taking advantage of the forbearance programs. Whether it's just or unjust, it is what it is. And there's so many people taking advantage that we have to be prepared as an industry to handle this. So it's really unfortunate. I do think that in the coming months that maybe this will change, and maybe mortgage companies won't be as scared, or they'll have another plan. But as of right now, this is the norm. And what it means is, doesn't matter what mortgage company you use or who you go to for your new loan, you're going to be paying a higher rate and a higher fee than you would have a month ago simply because of the fact of this forbearance stuff getting put in play and people, so many people, going in and doing these forbearance programs. So the conclusion is, do it if you need to, but if you are going to move forward with it, know the repercussions that we talked about. As we say, know before you owe. Get the contract, look it over, make sure you understand it, make sure you have an exit strategy. And if you're somebody that doesn't need it, like I said a few minutes ago, what the hell are you doing? Don't even consider this. If you can pay your mortgage payment, pay your damn payment. Look at refinancing as an option, okay? Look at maybe cashing out some equity if you need reserves. Look at lowering your mortgage payment if you need a little bit of payment relief. Don't take advantage of the forbearance. That is for people that actually have a financial need. They don't have a job, they have a reduction in income, etc. Okay? So that's my rant for today. I hope it helps and gives you some insight. And this is Robert Weinberg signing off. Thanks for listening and take care.